Welcome to Wall Street Confidential. I'm Aaron Task, joined by Jim Cramer.
Aaron,
Jim,
how are
good to
you?
see you again as always. Bit of a quiet start to this week.
Yeah, very confusing, frankly.
Is there a sense perhaps that last week, I know there was a lot of news out last week, but maybe there was some position squaring, some it's a new year, we got to take some stuff off the
I feel like that what happened is there were people who were both holding out and marking up, particularly in the oil patch. If you take a look, oil, we kind of knew that oil was ahead, the oil stocks were ahead of the commodity. But people held those stocks up, and now they've cratered. I also feel that some of the smaller commodity mineral stocks have been held up, and those have cratered. The strange thing for me is that the drug stocks had been down, and now they're going up precisely at the moment when the Democrats are out there saying their stuff. You know, maybe the issue with the drug stocks was it's clear that you can't just change overnight the Medicare policy like we thought.
And maybe once they get there, the lobbyists start saying, maybe we can do business, even though you're a Democrat.
Yeah, the drug companies spread around the money, and they're very good lobbyists. And also, I could say in the end that, there are a lot of plans that haven't worked in healthcare, but I think this Medicare Part D has worked, and I think it's kind of ain't broke, don't fix.
Okay, you mentioned oil stocks. A little bit of bounce Friday, a little bit of bounce today.
I don't trust them.
You don't trust it. Okay, you've written last week about waiting to see the whites of their eyes and buying the OIH calls. We're not there yet, you think?
I'm still stuck with that, doing that kind of work, which just says when the commodity was here at this point last time, Exxon was in the 60s. I was blindsided by the Conoco news. You know, Conoco had said a lot of really good things at their meeting just a few weeks ago. And then they revealed that the margins, which we should have been able to figure from the way that Valero was acting, were really bad. And that took my breath away. I am trying right now to figure out whether Conoco's a buy or a sell. I'm leaning toward a buy. That would be the first I turn because they're very committed to the stock. I like Chevron on a dividend basis, but I have to admit I was surprised by how bad things
And that was worse in your mind than the Neighbors warning of last week.
Yeah, because Neighbors is natural gas. But now you have natural gas being bad, you have refining margins being bad, and you start thinking, what's good?
Right, not much. Okay, let's move on to the healthcare. Some deals today. Caremark's rejecting Express Scripts. If you're a Caremark shareholder, don't you want them to take the higher bid?
Well, this is one of those where you would think that they would be acting in the shareholders' interests. I guess you can always craft some analysis, but I'm in the camp which just says highest bidder wins, and that's not we sold our Caremark.
Right, so you're out of
Every
it.
share.
Right.
We sold fractionalistplus.com. Don't need this. Felt like it had gotten too high because there was a sentiment in the marketplace that it would be a fair auction. It's obviously not.
And I know, I think the Pennsylvania Pension Fund, one of them had come in and tried to stop this deal with CVS, say Caremark Express Scripts has a better deal. Do you expect there's going to be more activist, quote-unquote, shareholders?
I think the deal will have a hard time closing if CVS stock doesn't go up. Yeah, I wouldn't be surprised if there were more. Everybody's, the hedge funds have really decided to play a much more vocal role, and this deal smacks of a not great deal, the CVS Caremark.
Right, and you'd think we'd hear more from the shareholders.
Yeah, it just smacks of I just don't like how this one's shaping up.
Okay, another, in terms of macro issues, talking about last week, the rebound in tech stocks.
Right.
And you made a call Friday, time to buy tech now.
Well, look at this. Look how easy it was for UBS to come out and say buy IBM and EMC, and you get instantaneous gains.
And Cisco, Microsoft, too.
Yeah, I think this is very telling. I think that the analysts are far more negative than the companies. Now, my friend Laura Caniglia at Goldman has got a lot of research which says by mid-year, the information tech spending is going to be bad. I look at it very differently. I look at it here as a 5-week window ahead of Vista where you can buy them. The earnings will not be disappointing because Q4 had this big budget flush that'll help. And I don't see any reason to abandon the group, and I see far more reasons to get behind it.
Okay. Last week, the Motorola warning was contained, it seemed to be.
Motorola is a problem company. Well, Tellabs is... I'm sick and tired of them blaming the integration. We've had mergers. Look at this. We've had so many mergers in telco, and every time we have a merger, Tellabs comes out and says, well, because of the merger, we don't make our money. Well, everybody else is in that space, too, and they're not issuing that. Right. I'm a little tired of Tellabs. They obviously don't have the product portfolio. Motorola, I think, is a leadership issue. I think Ed Zander's been curiously absent. And there was a terrific article this weekend about how they missed the market on a bunch of things. And don't forget, they're Sprint's biggest supplier, and Sprint has been so inconsistent, you just have no idea how bad they could be.
Right.
Sprint, by the way, doesn't go down, I think, because people just feel like it has to be taken over eventually.
Okay, and I know it's tough to talk monolithically, but in terms of the sector, we have the Consumer Electronics Show this week. There's Macworld this week. I would assume those would be positive events.
I think so, but my focus is on the biotech world because everyone else is looking. Otherwise, we have this Adam Fierstein, who I think is the best call in biotech. And whenever you have the best, I look at it like this. the tech world, the Mac world, the consumer, everybody's all over this. So they're kind of like perfect security, so to speak. I don't know what can come out of them. The only guy who's all over the biotech is Fierstein. So I kind of think like we have, our readers have an edge there. So go that way.
Okay. Well, in that vein, he and I were talking last week, and he thinks that maybe you want to sell any rallies that come out of this because usually the first half of the year is seasonally tough for biotech.
Well, I mean, my only issue with that is that the biotechs kind of underperformed the majors, Amgen, Genentech, in the last quarter, actually in the whole second half, and I think they can play catch up to pharma, which has been moving better. So I'm on the other side of that case. But I think more importantly, and why I like him so much is the stock specific stuff. I mean, look, if you had played that view that you should sell, then you'd miss the Cephalon, which I did.
The Genzyme.
Yeah, I mean, you really, I still think it's very stock specific. And the Dynavax, I'm just doing a piece about that. That's the one that blew up this morning. Reminds me, very hard group. Do it in a basket.
Okay. My guest has been Jim Cramer as always. Thanks very much. I'm Aaron Task. Stay tuned for more of TheStreet.com TV.